Good morning. This is Beyond the SEAF Model. I am Jack Kosar, and this is effective November 27th, 2023. Let's get started. We have a new SEAF signal for this week. Consumer discretionary comes in as our top ranked signal, with our other signal being technology, and communication services coming off as no longer being a signal. Communication services actually fell off into neutral territory. Also jumping into the top three, financials being actually our top inflow for our trading week. Interesting thing with financials is, we've been kind of watching it for the last couple of weeks and seeing this nice little trend. Tactical month of 3, trading week of 1. We'll be looking for this strategic quarterly time to actually fall off. As long as flows continue to flow into financials, look for it to kind of move up into the rankings a little bit, as well as it is being held back by its quarterly strategic, because as we've talked about, financials was actually toward the bottom several weeks ago. Another thing interesting to note on this week, and we'll kind of denote a little bit more in the heat map section, but fund flows for the trading week were relatively low last week compared to other weeks. So what we were seeing was, almost 5 times less in terms of the flows for last week. My guess has to, do with it being a holiday week, managers not wanting to put any kind of overly risky bets on, so they're more sticking to a status quo in terms of how they were moving their money around. So the flows that we were seeing, let me switch over to my heat map. The flows that we were seeing for this trading week were definitely not as strong as the flows we were seeing last week. What that really tells me here is that we don't want to bite in, and this is why the SEAF model is good. We don't want to bite in on any particular week or any particular month or any particular quarter. We really are looking for that momentum over the 3 different time periods in order to affect how we want to invest. So, that is not to say that, we don't want to take stock in the fact that financials is 1, consumer discretionary is 2, but what we like to see a lot more is that consumer discretionary is 2 across all 3 time periods. Technology fell off a little bit, but again, if you break down these to individual percentages, the difference between financials and technology was very slim. I also want to kind of re-highlight on, how to read this heat map. Looking at this is comparing, the colors are comparing the inflows or outflows on a time period basis. So this dark green here is actually meaning it's the strongest flow for the trading week, but it does not correlate to the strength of the tactical or the strength of the strategic. Other things to note: consumer staples really dropping off here, as the largest outflow is actually the largest net positive or negative flow for the particular week. The other thing to know is we looking in the tactical and the strategic. Technology was extremely strong relative to even to the inflows of the other sectors. So I'm not saying we're staying pat this week. The signals are consumer discretionary and technology, but I don't have as many trends to pull out as I would normally would, with the flows being a little bit weaker. Now going to the charts, just want to show you consumer discretionary. And I also wanted to highlight here, when we stay up in this favored ranking, we do tend to see outperformance relative to SPY. We do have slight increase in relative performance on the right now for our consumer discretionary, and we'll continue to look for, as long as it stays favored, as long as we have the high rankings, for this to go up. I would also like to see these fund flows kind of renormalize and a little bit more of the strength that we were seeing over the last couple of weeks. Moving over to, as I mentioned, consumer staples, dipping down into this avoid ranking, seeing that downward trend of relative outperformance. This continues a broader trend that we've been seeing kind of all year. And as you can see, as we start up, go from favored down into the avoid, that really denotes these big relative underperformance trends that we are seeing. And having sat up here briefly into favored, moving down into avoid, we're starting to see that trend again. Last but not least, Want to show technology. Technology did drop off to a ranking of 5 for the week, but was still a very strong overall ranking, coming in at 7, or second, but 7 points. We are still seeing technology strong. Seeing this outperformance here. Technology does lead. We are going to keep an eye on this weakening of flows coming in, but like I said, I have a feeling it has to do with the holiday week. But when we start to see, if we do start to see technology dip down, that is when we're going to go to our other indicators and our other models to understand maybe what, is this a lead off for what the market is doing. But as of right now, technology stays strongly favored, and that outperformance trend remains extremely strong through the time periods. That is all I have for this week. Thank you, and have a great rest of your week.